Top three things in my notebook this morning. Number one, Japan. Number two, oil. And number three, that old bond market, the signal on the 10-year bond yield, which is critical. But first on Japan. Japan evidently didn't get split on the I split 7-for-1. And in the Nikkei, I think there is could use that. As you know, it's a big number out there, but it's a big number that is declining, down 11% for the year to date, but down a full 1% with the NASDAQ futures ripping. That's got to be frustrating. We do not like Japanese equities. We do not like Japanese equities specifically because we do not like the dollar versus the yen. As that goes, the Nikkei goes, but you already know that. Second point, oil. Don't forget oil. I split. You can't I split the price of oil at the pump, not just yet. Again, we got a breakout signal here in WTI crude oil. That's why you saw a real-time alert signal to buy oil this week. And again, on the pullback, that's what you want to be doing. There is no resistance for WTI to 105.03 on our model. And again, as I said yesterday, you could easily get to 110 on WTI from there. Putin power is in play. The Russians are collapsing. Russian stock market down again 1% this morning, down 20% for the year to date. The trifecta of risk that is Putin right now, and again, trifecta being the ruble, again, the currency market, the stock market, and the bond market post their failed bond auction yesterday, is a major problem that he will fight back with the petrodollar. So again, be long of oil in oil terms. Finally, 10-year bond yield, they look at oil and they say, ooh, we don't get the I split either. I mean, look, the 10-year bond yield basically says, hey, look, that's a growth slowing signal. I can give you a whole heck of a lot of growth slowing signals, but again, Facebook earnings aren't going to change that. The reality is that the 10-year bond yield continues to be in a bearish trend. We continue to be bearish on the 10-year yield, which means we're bullish on bonds. And again, the yield spread continues to compress. 10s minus 2s has compressed again this morning to 225 basis points wide, which is a classic growth slowing signal for anyone who has studied the history of markets and economies. So that's that. Those are your top three things.